Good afternoon, everybody, and welcome to the Broker Moves review for this week ending Friday, December 11. My name is Carl Capilingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we close out the week looking at what the big brokers and research houses said about Australian stocks. Often they'll be upgrading, downgrading, changing their price targets. We'll talk about that and more after we talk about the Think Markets difference, which is substantial $8 flat rate share trades, your own holder identification number, unlimited phone support, and no hidden platform or subscription fees. And until December 31, switch over to us and you also get your first 10 trades for free. So I reckon that's about 14 fantastic reasons why your next ASX share trade should be with Think Markets. The agenda for today is to check out all of those big broker moves. As I said, we'll have a look at some stocks in the news as well. We'll kick off with the upgrades. Ainsworth Game Technology, they've gone from neutral to outperform at Macquarie Group. I should say big brokers like Macquarie, JP Morgan, Credit Suisse, you can see them all listed down there on the left-hand side. They will have an indication for what their clients should do with the stock. So anything from sell to neutral to buy, in between and outside sometimes. And often they'll have a price target as well, and they'll be based upon their valuation. So they'll look at all the key fundamentals for the stock, come up with an idea of its value, and then translate that into a share price target for clients to watch out for. So we can see neutral to outperform for Ainsworth Gaming Technology, and quite a big bump up in the target price from Macquarie from 45 cents to 65 cents. In that second from last column, we can see that that is a 44% increase in that target price, and it is still about 27.7% higher than the last price for the stock. Okay, let's have a look at some of the other ones. Domino's Pizza, they've gone from equal weight to overweight. So good to see a stock I do like from a technical perspective and from a fundamental perspective, but it's pulled back quite a bit. So good to see JP Morgan going to overweight on that one. No update on the price target, it seems there. Macquarie going to outperform from neutral on both Estia and Evolution. Evolution also in the spotlight at Morgan Stanley going to equal weight from underweight. And IGO, big news this week, they've it's not a takeover, they've taken a stake in a lithium miner, and that has been widely well received by brokers, going to outperform at Credit Suisse. And I think we'll see some price target changes for that a little bit later on. But a big bump up there, 22% that price target. But that target is actually below where the share price is, but the share price has popped quite a bit today. Insightic pivot to outperform, as was Newcrest at Macquarie. We've gone to neutral at Macquarie for Oceana Gold. They did actually upgrade a few of their gold stocks this week. That was quite interesting. And the rest are West African Resources there at Macquarie as well. And that's going to outperform. Tyro to neutral, Western Areas to outperform. What we will see throughout this presentation is a consistent theme of focus on resource stocks. Many of those companies getting upgrades. As we know, a lot of the commodity prices have surged. This is an interesting one here, isn't it? Seven West Media going from hold to buy, and the price target going up 135.7%, still seeing about 24% upside from Jefferies. Not so lucky this week, the downgrades. Champion Iron going from neutral to sell, but that share price has been on an absolute tear lately. So Citigroup, I think, not seeing so much value left in the share price at current levels. They did upgrade the share price target by 31%, but as we can see, that target is actually below where the price is trading right now. So what I mean by that is the price is higher than the broker's target, and that often justifies that sell, doesn't it? Okay, quickly through the rest of them. Fortescue getting some attention. That's gone from buy to neutral. Again, another stock that has seen a very rapid price appreciation. They did raise their price target, but again, the target is below the current share price. What else? Interesting ones here. Sandfire Resources. Again, a stock that's had a really good run, as has Sierra Resources. And I do note that a lot of these, if you have a look at this column, despite the fact they got downgraded, a lot of the times the price targets actually got increased as well. Some of the financial stocks like Magellan, some of those fund managers not faring as well. Downgrade with a price target decrease. Let's have a look at the stocks that didn't see a ratings changed, but their price target was increased by the brokers. And probably the most interesting ones we'll find, I guess, are going to come from this column and this column here, and to some extent whether the broker is actually calling it a buy as well as increasing their price target. So let's look for the big ones. I reckon that's pretty impressive. Anything over 20% is pretty impressive, isn't it? So Citigroup, again, another one of those resources stocks. Alumina going from 180 to 220, 20% increase, and still some upside seen in the share price, unlike a couple of those other material stocks we saw before. Alumina also getting an upgrade in its price target from Morgan Stanley, but a smaller one. BHP Group, look, a big cluster here. Iron ore prices through the roof, topping $150 US a tonne. They're up about 8 or 9% in China as we speak on the Dalian exchange, and some pretty decent upgrades in terms of target for BHP. But looking at where the current price is compared to those targets, brokers not seeing a whole heap of upside. I think I've caught CBA on that one. A little bump up there from Jefferies. Big pop for Dicker Data. That's good as a company I do like. Very nice chart. Go check that one out. 32% increase in the price target. Good bump up for Downer Group, 26% and still 17% upside seen. And then Fortescue featuring as well. So price target increases from 20 to 23 and 14.20 to 17.45 from Macquarie and Morgan Stanley respectively. But look at that one. The current target is well below the current share price for Morgan Stanley and about the same for Macquarie. And Galaxy Resource, another one of those mining companies, getting a bump up there. I won't spend too long because, as you can see, this list goes on and on and on. Helios got a few, not huge gains, but heading in the right direction. A little bit of upside left over. IGO, we talked about that one today on its partial takeover of that lithium company. But massive share price pop today, about 25%, I think it was, and therefore the price targets are sitting below the current price. Metcash was in the news. We'll talk about that one a little bit later on. There's another iron ore stock in there, well, two iron ore stocks in a row there, and more resources stocks, big gains. Look at some of these gains, 84% increase in Media. That's a stock whose chart is worth following up on, and still some upside there from Credit Suisse. And going to the next page, Oz Minerals, lots of attention here for the copper and zinc and gold miner too. Big pops up in the share price. There's still a little bit of upside seen in that. Rio Tinto also getting some bump ups, a little bit more modest and a bit closer to the price target is the current price. South 32, a stock we covered in our Think Technical during the week as a buy, getting some price target increases there. Sims Group going up by 26%, but that target is below the current share price from Morgan Stanley. Sierra Resources, still some upside seen from UBS. Whitehaven Coal stocks looking very interesting today. So in today's Think Technical, I encourage you to go to the website and check that one out. We actually covered Whitehaven Coal as a buy. So we are in alignment with these three brokers here, Citigroup, Morgan Stanley and UBS. And their price target increases were substantial this week and still seeing quite a bit of upside from here. So worth following that one up. Also, price target decreases. Not so lucky. Appen came out with a profit downgrade this week. They said that COVID is severely impacting their ability to do business in the US, where they earn about 85% of their revenues. On top of that, the strength in the Australian dollar is undermining their earnings as well. So we saw a couple of price target decreases. Credit Suisse down 13.3%. Jefferies down 20%. I do note there a little bit of upside still seen from Credit Suisse, but a nice upside seen there from Jefferies. We'll probably see more of these broker updates come out for Appen during the week as brokers catch up to that news. Morgan Stanley busy on the gold sector. So Regis, Saracen, St Barbara and Sandfire all getting price target downgrades. Not huge though, and to be fair, they're still seeing a fair bit of upside in those reduced target prices, and they're still, overweight on at least three of those. Okay, having a look at some of the stocks in the news. Metcash came out with their first half results way ahead of expectations. So brokers generally quite positive on it. We saw Citigroup, they've raised their price target from $3.70 to $4, retained their buy rating. They were very pleased with those first half results, noted a strong performance in hardware, some moderation in growth in supermarkets, but still seeing a strong end of year for them. And they increased their expected earnings by 12%. So that's a big pop for FY21 and 8% in FY22. Credit Suisse, They saw the price target increasing to $3.97, retained their outperform rating. They were impressed with the first half results, also well ahead of expectations, and they see earnings increasingly driven by segments other than groceries, which is a positive, particularly in hardware, and recent acquisitions were expected to add to the bottom line sooner rather than later. Jefferies raised their price target from $3.50 to $4. That's quite a big pop. They cited those better than expected results. Earnings beat across all segments. Momentum continues to be strong. Metcash raised their price target from $3.05 to $3.60, another big pop. Only neutral though. They were pretty happy with the results, ahead of expectations, particularly with respect to cash flows, sees further upside from the holiday period, but risks still spending patterns post-COVID. Morgan Stanley, they went from 380 to 415, retained an overweight rating. They were positive on the results. And a bit of a theme here, isn't it? Spoke too soon. UBS downgraded Metcash from buy to neutral. There's always a wowzer there, but they did increase the price target substantially from 325 to 370. And so their rationale was that the recent share price appreciation, and we can see this pop here from around about sort of 310 into 350, leaves little upside based upon their valuation, despite those results being better than expected. Okay, in terms of the consensus, we've got 2 strong buys from the brokers, 6 buys, 2 holds, and just the 1 sell, so definitely skewing to the buy side there. Their mean average estimates are at about 359, which, as we saw from UBS, probably doesn't leave a lot of upside from the current price, but we do have a high estimate of 415. In terms of some of the fundamentals, some of the key numbers for the company, and hey, another plug for our Think Learning program, in which we covered this week how to value a stock, and that recording's on the website as well, so go check that one out. We talked about some of these key numbers as well. We certainly talked about price to free cash flow. We talked about the PE, the PEG, and enterprise value to revenue. So quite timely. Go check out that recording and you will know exactly what all these numbers mean and how to use them. EV to revenue is very low, so that's a good number. We'll see. We have to compare that to some of the other companies in a second. PE is quite reasonable, sort of mid-teens, not on the expensive side of things, but the growth is not fantastic at this stage with a PEG of 2.99. Dividend yield, that's quite impressive given the low yield environment at the moment, 4.26%. I would expect that to be fully franked. And the price to free cash flow is actually quite good also. Return on equity good, return on invested capital also quite good. So fundamentals are stacking up pretty well there for Metcash. We'll talk about the Fortescue ones before we talk about the broker moves, just to be able to compare. So that is an outstanding enterprise value to revenue. So it shows that Metcash is actually well ahead on that one. This is an outstanding PE ratio. PEG, not sure why that's not filled in, probably a little bit of a bug in the system there. The dividend yield is off the charts and probably going to get better given the cash that's coming into this business right now. We know that there's a lot of cash in there because of that very, very low price to free cash flow number. Return on equity is through the roof, as so is ROIC. Great numbers on Fortescue. What do the brokers think? 1 strong buy, 3 buys, 12 holds, and a lot of them have moved to hold just simply on how well the share price is going. The reason for that, iron ore prices, I won't show you the chart of iron ore because it looks pretty similar to the Fortescue chart as one would expect. Look, I'll let you press pause and read through those ratings. In fact, what we do have here is the broker moves for a number of different iron ore stocks through the week. I've just chosen to focus on Fortescue for the chart and the fundamentals, but you can see there's quite a lot of action for that iron ore sector during the week. And that's spread out to the rest of the metal sector as well. So we've got a bunch of other moves on the base metals. And again, I'll let you press pause and read those. Just looking at the stock I chose to focus on here in the chart and in the fundamentals, we've got Oz Minerals. Average of a hold there, again, because of the sharp upswing in prices. Some brokers have changed their ratings a little bit on that one. Mean targets at 1761, which is actually below where the current share price is, but we've got a high of 21 up here. Looking at some of the fundamentals, this is all very good here. PE is high compared to, say, Metcash, compared to, say, Fortescue. The PEG is outstanding, though. That's a tick. What was the PEG? Oh, we didn't have it. That's right, on Fortescue. So that's what we want to see on the PEG. You want to see it under the value of 1, and certainly to be a positive number. So 0.59 is a nice value. The dividend yield, nowhere near as good as Fortescue or Metcash. Price to free cash flow is pretty good, but not as good as the other two. Return on equity is not as good as the other two. So giving you a little bit of an insight to some of the fundamental drivers behind some of these ratings, perhaps. Okay. As I've mentioned a number of times in today's presentation, there's a whole lot of extra information in our market news section. Fundamentals, technicals, all sorts of other fantastic other analysis. So get out there and use it. You can follow me on Twitter if you like. There's my handle, or the Think Markets handle as well. And next week, we've got the usual weekly Think Tank where we wrap up the week that was, look ahead to the week that will be, and then heading into 2021, we're taking a bit of a break for our Think Learning series, but we'll kick off with a look at an introduction to technical analysis before we do Ask the Experts the week after. That's where you get to dial in and ask me about any of the stocks you're interested in. I'll give you a quick fundamental and technical on those. The disclaimer before I leave you says that everything we've talked about today is general in nature. We are a regulated Australian broker. We do have some products that could see you lose more than your deposit. So before you act upon any of this general advice, make sure you consider all of these things. Give us a call or consult the website for further details. Thanks for joining me today and throughout the week. Hopefully you've learnt lots, had a lot of fun trading the markets, and I will catch up with you very soon. Bye-bye for now.